All right then, Ralph. So who do we have today?
Yeah, very excited. We have our special guest this month is Anthony Vicino. Very excited to have him on the meetup today. I'm going to read his short bio here, and then we'll jump right into it. So Anthony Vicino is a best-selling author and real estate investor and serial entrepreneur committed to helping people maximize their return in life. He is the co-founding partner of Invictus Capital, a multifamily acquisition firm based in Minneapolis, Minnesota, with 40 million in assets under management that provide busy working professionals with the opportunity to invest better. As the host of the Multifamily Investing Made Simple podcast and author of Passive Investing Made Simple, Anthony firmly believes investing shouldn't be complicated, scary, or overwhelming. So, everybody, welcome Anthony Vicino to our meetup today. Anthony, how's it going?
It's good. It's good. Having a lot of fun so far in the breakout rooms. We had some good chats and just looking forward to sharing a little bit of my story and hopefully it helps you guys on your path. So excited to be here.
Yeah, very excited to chat today. So let's jump right into it. Why don't you start off by telling us a little bit about yourself and how you got into multifamily investing? It's sort of a unorthodox or non-traditional route, but I'd love to hear to share with our audience today.
Yeah, I feel like there's no truly traditional route. When I talk to so many different entrepreneurs and investors these days, everybody kind of got started in similar ways, but the impetus for it is quite different in a lot of instances. For me, the thing you got to understand, and I say this over and over and over, so if you've heard me say it before, buckle up. I have really severe ADHD, which was problematic when I was a kid and also when I was an adult. So coming out of college, I had all these degrees, but I didn't have any sense of what I was going to do in the world. And every job that I tried tried to hold down, I failed and I got fired, and I was like chronically unemployable. So I was kind of forced to go and find my own path through life, which led me down some interesting avenues. For a while, I was a professional rock climber, and then I started writing science fiction and fantasy novels and published about 12 of those. And there, I was doing a lot of different things in my life, but everything kind of came to this inflection point where I hit the proverbial rock bottom when my fiance left me, and I found myself living in the back of a van and very, very, very much in debt. Because the thing that they don't tell you about being a professional athlete or being an author is that you probably aren't going to make a ton of money. Like, unless you're the LeBron James of your sport, like, you're probably not going to make a ton of money. And unless you're Stephen King, you're probably not going to just knock it out of the park and be a gazillionaire. And so this was an issue for me at that point, because I was very, very, very poor, and now I was living in the back of a van. And literally, I had this van parked in the back of a climbing gym in Oakland, California, downtown Oakland, and I had an extension cord that ran into the building, and it was powering my van. So like, that was giving me lights at night, and then I would just use the showers there, and like, that was my home. And um at that point, like, I had nowhere to go but up, but it didn't really seem like it at that moment. I got really fortunate that a buddy came to me at that time and he asked me if I'd be interested in building a business with him. And at that point, I knew nothing about building businesses. But the great thing about being at rock bottom or near rock bottom is that you'll try anything. You're like, what's the worst that could happen? And I think if life is going well, if you come out of school and you get your job and it's comfortable, like, comfort is, I think, a harder type of shackle to break. Like, good being the enemy of great. If you have a good job and things are going well enough, but they're not fantastic, those are shackles that are way harder to break in life than when you have no other choice but to do something drastically different. So for me, like, that was a blessing in disguise of like being at that rock bottom point, because if I hadn't been there, I probably wouldn't have tried entrepreneurship, because I wasn't the kid that would pluck flowers from his neighbor's yard and then sell them back to, the other neighbor. And I didn't have a lemonade stand. Like, the idea of sales terrified me. I'm pretty introverted. So like, that never struck me as a path that I was going to go down in life. But when my buddy at that moment asked me, hey, do you want to build a business? I was like, fine, let's do something. And so we built a high-rise window washing company, which doesn't sound super sexy, but it was the coolest thing in the world to me at that point, because it started to peel back the blinders of possibility of like what you could do in this world if you could find your unique skills and how to deliver it to the world to add value. And that that sparked something inside of me. And for the next decade, I would just go on and keep building and exiting businesses, and found that I had an inherent skill for that. And real estate kind of came onto my radar in 2012 when a buddy of mine, he came to me and he's like, hey, I see you're doing pretty well over here with this window washing company. Do you also want to maybe invest in some real estate? And rewinding back to college, I actually did 3 fix and flips living with my roommate and his dad. They would buy these houses, we'd do the construction and fix and flip it, just like you see on HGTV. And that was my first experience with real estate. And all I learned from that was I can swing a hammer, but I can't hit a nail. And so like renovations, construction, if that's what real estate is, I wanted nothing to do with it. Like I suck with my hands. Like I'm not good. You could give me the demolition tasks, but that's about it. So like coming out of that experience, and I think a lot of people think when they think real estate investing, they think fix and flips. And that's where my mind went to when my buddy asked me, many years later, hey, do you want to invest in real estate? And I was like, no, but I believe in you. And so I'll invest in you and you go do it. So I was actually passively investing in my buddy before I even understood what that really meant. And so we went and acquired a couple of quads in Oakland, and we still have them to this day. It was a good time to buy in 2012. But that didn't spark my soul yet. It wasn't the thing that got me going, oh, real estate, that's my path. That wouldn't happen until about 2017. I had been kind of acquiring things slowly but surely over those years. But in 2017, I was at this inflection point again in my life where I had just succeeded in getting a business that we were building to the point where it no longer needed me. And I was starting to wrestle with the question of, okay, what am I going to do next? And I had a mentor at the time who said something that was very impactful for me, which was responsibility is the price of freedom. And what that meant for me was like I was building these businesses and I was succeeding for myself and my family, financially, but I wasn't doing a lot to make an impact beyond like myself and my first ring relationships. And so I started setting my sights on what could I do with my life that would be able to impact as many lives as possible. And as I looked around, like I landed on real estate because everybody has a relationship with real estate in some shape or form, whether you're a renter, you're an owner, or you're homeless, living in the back of a van, and you don't have like access to a home. Like everybody has some kind of relationship to real estate. And so I saw that as an avenue to make infinite impact. And I thought that was really cool. So I started diving into real estate, specifically multifamily, and discovered, holy crap, this is really cool because it's simple. And like once you understand the very few number of levers that actually make a successful real estate investment, like you can scale this thing to the moon. So I got really excited about that. We started scaling where we focus on about 15 to 80 unit, I would say Class B apartment complexes in the Twin Cities of Minnesota. And what makes us a little bit weird is that we're vertically integrated. So we have an in-house property management company and we only manage our own assets because our core thesis is if we take care of the residents, they take care of the buildings and the buildings take care of the investors. But the only way that we can be certain that our residents are being cared for how we would want to be treated is if we are in fact the ones that are taking care of them. And so that's been very successful for us over the last, since 2019, when we formed, we've acquired about $40 million of assets. Right now we have another about 35 million in the pipeline. So we'll double to about 75, 80 by the end of the year. And yeah, that's just, my long convoluted story. I don't know if it answered any of the questions, but here we are.
Wow. I mean, what an amazing story. I mean, I'm trying to like figure out where do we go next here because you just shared so much from here. But, I mean, like from living in the back of a van, pretty much homeless to now with 40 million in assets under management is just an incredible journey. But, one of the things I wanted to highlight from that really is, because we do have some folks that are, on now and eventually they'll watch this later on that are sort of newer investors. And I think the biggest part of really taking this dive into investing is really mindset. And so you talked about that a little bit about like being at rock bottom and sort of, when you're at rock bottom, that's sort of how I got started in real estate as well, right? So when you're at rock bottom, you have two choices, right? You can either give up, you could surrender, you could succumb, or you can kind of say, you know what, I'm not gonna give up. I'm not gonna let this be the end for me. And you pushed into entrepreneurship, which is scarier and much less safe than just 9 to 5 working for someone else, letting them worry about that. So again, it's really that mindset that sort of enabled you to jump into that. Can you talk a little bit about what that mindset was that kind of helped you, really take on? Because entrepreneurship is really a rocky sort of roller coaster, right? Anybody who is an entrepreneur could tell you that it's not like all sunshine and rainbows, but there's some dark days, there's some tough moments, there's some times where you ask yourself, am I doing the right thing here? Should I just forget this and move on? So maybe you could share a little bit about what some of that mindset was that kind of helped you, take that dive, and what allows you now to be successful and continue to be successful in investing in multifamily investing.
Yeah, I think the biggest one is understanding that everything you're going to accomplish and everything that you're going to encounter in pursuit of entrepreneurship or investing comes down to perspective. Whether it's an opportunity or an obstacle is just a perspective. And it's how you choose to approach it that's going to define how you ultimately succeed or fail. And like the van is a good example, right? At one point in my life, I was living in a van by choice because I was a professional rock climber, which sounds cool, but really all it means is I travel around the world living in the back of a van, sleeping in the dirt, climbing on rocks. However, when my fiance left me and now I'm living in the back of a van because I had nowhere else to go, the circumstance is fundamentally no different, right? I'm living in the back of a van. But at one point in my life, I had viewed that as an opportunity. At the other point, it was now an obstacle. And the only thing that changed was my perspective on the matter, right? And once I started to like understand, this wasn't a shift that occurred like instantaneously. It took a long time of really trying to dig for truth, that I look back on that situation. I realized like those were fundamentally the same thing. The only thing that had changed was how I was looking at them. And once I started to adopt that mindset, because in business, you're paid in magnitude or in proportion to the magnitude of problems that you solve, right? And so when you see big problems, if you shrivel and you shrink and you get overwhelmed by that, then you're gonna struggle. But if you look at those things and say, that's my opportunity, that's where the growth can occur, then you run towards that. And for me, I talk about this idea a lot about the comfort zone, where the comfort zone isn't very comfortable. It's just familiar. So if you think about your life and all the things that it could be and that greatness that you believe that you have inside of yourself, the thing that's probably keeping you from going and truly pursuing that and stepping out of that comfort zone, as people say, is the fact that you are comfortable, but you're not truly comfortable because there's this discontent. There's this thing like nagging at you saying, oh, maybe I should go. But the pain that's, keeping you there is not yet greater than the pain that would drive you to leaving that thing. Right. And so the familiar zone is like truly the enemy of growth. And in entrepreneurship, if you really want to succeed, you have to constantly be growing. You have to be pushing forward, because you hear that myth about the shark, where the shark, if he's not swimming forward, he's drowning. I don't believe that's true, but it is true for humans. Like you're either going in one of two directions. You're either moving forward or you're moving backwards, because nature abhors a vacuum, and stasis, equilibrium, never stays put for very long. And so if you think that you can just kind of maintain the status quo, you're fooling yourself.
Yep.
You're either, sliding back into entropy, or you're applying more energy into the system to maintain and grow it. And that's the only way to succeed that I found in business, but also in life, is to inject more energy into it and continue to push forward.
Excellent. Yeah, love it. I love what you said there. I love the idea about perspective, right? You can look at it really just summarizes what we do as syndicators, right? We can look at a multifamily property. We can look at a building. We can look at its financials. And a lot of people will see something. They'll see, well, this property is not a good property. This property is not being run properly. This property is run down. But it's really about perspective, right? Do you see something that's not worth investing in, or do you see somewhere you can add value to create, to force the appreciation and create an opportunity for investors to passively invest with you and make money? So I love that idea about perspective. So jumping into syndication a little bit here, and really we're focused today on sort of raising capital. in your syndication experience, what have you found to be the most challenging part of raising capital, and how have you addressed it, both in your company with Invictus, and also like what are some of the points that you, which I'm sure there might be some crossover there, but what are some of the points in your book that also address the challenges you face raising capital?
The biggest thing, the biggest issue that every business is going to run into, regardless of if you're trying to raise capital, you're trying to sell a widget on the street, like the biggest thing is overcoming obscurity and the fact that nobody knows who you are or what you do or how you can help them. And that is the hardest part about raising capital, especially in the beginning, is nobody knows who you are. Your friends, your family, they know you as one thing. You have an identity with them. And if you're coming from a corporate world, when you suddenly start talking to people about real estate, they look at you and go, wait, you're this thing, right? Because we fix our identities of how we understand other people kind of in stasis. And so that's the big one, is overcoming that obscurity in people's minds and saying like, oh, I actually know who you are, what you do, and how you can help me. And in the early days, that should be 90% of what you spend your time overcoming, is just becoming known. It's not about becoming liked, it's about becoming known, because until I know you, I can't do business with you. And that's the hardest thing for everybody. And once people know you, once you build that relationship, raising capital, the actual mechanics of it, and like having a conversation and pitching somebody on the idea becomes incredibly easy. The hardest thing in the world is cold calling a stranger who you've never met before and then saying, hey, I'm so-and-so, I have this awesome deal for you, right? Like if you've ever done cold calling or any kind of sales in that environment, it's incredibly difficult. It's incredibly easy, however, in an environment where people know who you are and they're coming to you and saying, hey, I heard you through this venue, or somebody recommended you from this thing, or I saw your book over here, this podcast over there, and they're coming to you now, and it's an entirely different relationship now. It's no longer you're just reaching out of the void and saying, hey, I'm so-and-so, listen to me. Now it's them coming to you. And that's the biggest thing. And I find that most people aren't solving for obscurity correctly. They're being inconsistent with how they're trying to sell their messaging and how they're producing content. And so they go at it in kind of this, what would be haphazard manner, where there's no consistent form behind it. And that's the thing, that if you want to convince somebody or get somebody to be comfortable with the idea of giving you hundreds of thousands of dollars, they have to believe in you as being a consistent person. Like that's really at the end of the day what integrity is, like from a external perspective, is saying, I know how you're going to react given these circumstances. Like you might define integrity fundamentally differently, but if I know how you're likely to react given circumstances, I can say to a high degree of confidence, like I can trust you because I trust what you'll do. I trust how you go through the mental model. And that only occurs if you can just be consistent and actually show up day after day after day. So obscurity.
Excellent. Yeah, excellent. I love that. Solving for obscurity, which is something that obviously we'll all face as new syndicators at some point. And what you said is true. It's really about the consistency, right? Because sometimes we could, start to, create some kind of content platform, but there is a level of consistency that has to happen before you start to see results. Oftentimes people kind of quit too early because they're not seeing results fast enough. And that really affects people's ability to remain consistent. And I was recently heard this quote by I think it was Jim Rohn that said, there's two pains in life. It's either the pain of discipline or the pain of regret. And oftentimes it's people trying to avoid the discipline of remaining consistent to be able to solve for obscurity, and they end up regretting it later. What would you say are some of the ways to solve for obscurity, right? Like what are some of the ways to get yourself out there and we know like building content and being active on social media, but what are some of the, I guess, the secret sauce behind doing that will really help? One, maybe help you get results a little bit faster. And then two, also, what are some of the, I guess, secret sauce behind sort of remaining consistent? What do you do to remain consistent in that?
That's a good question. There's no silver bullet when it comes to overcoming obscurity. It's about finding a megaphone and standing on the tallest platform you can, and then getting up there every single day and yelling at the top of your lungs. Like it's kind of it. But so yeah, we know social media is great, and we could talk about the mechanics and techniques of should I be on LinkedIn or Instagram or Facebook, and how should I create my content to approach those different avenues. But at the end of the day, understand that people only consume information in one of three ways. They either read it, they listen to it, or they watch it, right? So that's, writing, that's listening, audio, that's video. And so you just need to figure out what you're uniquely qualified to do, especially in the beginning. Like don't go out there and do everything, because that's why they fall off, because they come into content and they're like, I'm going to be on LinkedIn. I'm going to be posting 3 times a day. And then I'm going to post 5 times on Instagram. And then I'm going to have this podcast. I'm going to put out 3 videos. And then they start to do it. And it's like, after about 2 weeks, they're like, this is too much. I can't do this. And then they just stop doing it all. And so what you got to do is figure out, what are you uniquely qualified to do? Are you a great writer? That's what I started with, because I had a writing background. And then I slowly evolved and started building into audio and then also into video. But if you're great on video, if you're a beautiful person like Dinesh, you're great. You're like, you got the hair, man. Like you should be on video, and you got the voice too. So you should be definitely on audio, right? Like, so figure out like what you're uniquely qualified, and then lean into it. If that's YouTube, that could be a great platform. If it's podcasting, it's fantastic. But figure out what you can be uniquely good at, and then be consistent with it until you've created the structure so that it becomes easy, and then you can start adding in more things. But don't add in too much at first. Just figure out what's your one platform, what's your one device for getting through to people, and then keep showing up at that until it becomes just so easy that now it's like, I have the bandwidth to bring on the next thing. Yeah, that's all I got on that one.
Yeah. No, and I mean, listen, that's great. I mean, a lot of times what we tend to do is overcomplicate things that are really quite simple, right? So even with thinking about creating content, right, we think about a lot of different ways that we can create content, and we want to be the most unique, and we try to do things that are just not sustainable. But it really comes down to, people read, they listen, or they watch. So pick your area, and then really just put your head down and be consistent, stick to it. So I love that. That's great. What would you say are some of the top questions? So as we're thinking about raising capital, right, what would you say are some of the top questions you get asked by an investor who hasn't invested with you yet, before they decide to invest with you? Maybe you're having this initial meeting, or just getting to know them. Maybe they heard your podcast, or maybe you're just reaching out to a few people that you met somewhere networking. What would you say are some of the more common questions that you're asked by potential investors, and how do you sort of answer those questions?
Yeah, that's a good question. That's really good. But before I answer that one, just rewinding for 2 seconds.
Yep.
On the content portion of things. Here's a hack. Here's something that's going to help you guys, I think, make content that resonates and is meaningful for the audience. It's not about you. It's not about you selling yourself and telling the world like how badass and awesome you are. It's about educating and entertaining and inspiring. If you can do one of those 3 things, educate, entertain, or inspire, or find some combination of doing 2 of those 3 things in each post or each piece of content, you're going to do really well. But understand that it's about the person that's consuming the information and what they need to hear, what's going to resonate with them, and not just about what you want to talk about. That's the thing that I find people getting entirely wrong. Like, if you want to raise capital, understand that what a passive investor wants to hear about is fundamentally different than what you, as an operator, somebody who lives and breathes and dreams about real estate, wants to talk about. They don't want to go get their master's degree in real estate. So don't give it to them. Like, understand that they want to know enough to be able to take action without feeling like an idiot. That's what they want. So help them get to that place. That's your job. So back to the question of like, what's the question that passive investors ask? It's interesting. It's gone through this evolution. In the early days when we were raising capital and people didn't know who we were, or that this was the thing we were doing, there were so many questions about, hey, what's multifamily? What's a syndication? What's a cap rate? And we were getting those conversations so frequently that we decided we're going to launch a podcast and we'll write a book. That's where Passive Investing Made Simple was born, was out of this, hey, we're having the same conversation, educating passive investors over and over and over, just about the vehicle and how the investment works. And what ends up happening is when I'm sitting down trying to educate you for the first time on a 30-minute call, like, there's going to be a lot of things that you don't understand. We can only go so deep, and you're going to leave it feeling stupid at times because there's probably questions you don't fully understand and you don't feel like you should ask them because you're afraid you'll look dumb. And so what we were finding is like we needed to create content that people could consume on their own time. That's where podcasting came in and writing books, so people could dive into it at their own leisure and consume it in ways that would maybe resonate with them so they could understand it. And once we did that, once we put out a pretty robust library of educational content, the quality of conversations we were having with prospective investors instantly went through the roof. So in the early days, we would spend an hour with prospective investors on an onboarding call. These days, I spend maybe 20 minutes. And it's usually with a prospect who comes into the funnel and they're like, hey, I read the book. I listened to a couple of your podcasts. I love what you guys are doing. I understand what you guys are doing. And so the questions that we're talking about now are on a deeper level. And it's not about, hey, what's a preferred return? What's a promote? Now they're asking questions about, hey, how are you factoring in inflation and rising interest rates into your debt structure? Or, hey, what are the 3 things that like you perceive as the biggest risk factors in this particular investment at this time in the market cycle? Like those are the types of questions that we're getting into now. And it was all born off the back of educating investors and prospects well before they ever even get on that first phone call. Because if on the first phone call, they're just asking you questions about like, what's an apartment building? Why should I invest in that? Like you cannot make the jump from you should invest in apartment buildings to, hey, do you want to give me $100,000? You can't make that jump in one conversation. And so it's a long nurturing process.
Yeah. And it's a way to really build a relationship with your investor before you even get to know them on a personal basis, right? Like they already know you. You've created a sort of resume, a footprint for yourself through your content. And I love that. Educate, entertain, and inspire. We love that. We have a question from one of the audience members here, Nicole Pendergrass. What's up, Nicole? So Nicole asks, how can I add value to a GP team as a capital raiser for my first raise if I don't really know how much I can bring to the table, right? The syndicates want to know how much can you raise, and maybe you don't really have a pulse on that. So how can we still jump into that capital raise position with the GP if we're not sure how much we can bring to the table as a capital raiser?
That's a really good question. It's interesting for us. We don't really work a lot with capital raisers. We raise our own capital internal, like we're kind of control freaks. And so we don't typically bring a lot of other people into our GPs. So I can't speak to it from like a personal perspective. What I would say is that the hardest raise is your first one because you have no idea what you're capable of doing. You're probably going to simultaneously overestimate and underestimate what you could do. And that seems really weird, but it's going to be true. What I would do is find an operator that understands where you are in your life cycle and understands that, hey, I don't know what I can do. And this comes from being very transparent and open with your partners and saying, I think I could do 200,000, or I think I could do 500,000, but I don't want the whole deal to be riding on me if failing or succeeding. And so what you probably don't want to do is you probably don't want to work with a brand new operator who is also like, yeah, I don't know, maybe I can raise 500,000. Like if you're working with a couple of different people who are like answering questions like, I think I can, then that could be very stress inducing. So I'd find an operator who's probably a little bit further on and they're willing to work with you and understand where you are in your life cycle. And if you can't do the full raise, they can flex their muscle and fill the gap, right? That's the best case scenario. It's going to be hard though to find that operator to take a chance on you if you're not out there in the world being consistent. They don't have visibility. If they think that you're just fly by night, like, oh, you're somebody that you think you want to do this, but you haven't been doing it long enough or trying long enough, that they think that you'll just kind of disappear into the void, then they're not going to take a chance on you. So you need to be, again, creating content. You need to be out there and visible. You need to be showing up at the events. You need to be consistently reaching back out to these operators and like nurturing the relationship. So at some point they go, oh yeah, I've been talking to Nicole for like the past 2 years. Like she keeps showing up. Of course I'm going to work with her now. Like she's going to be here in the future because she's been here in the past, even though she hasn't maybe done that first deal yet. Like I'm going to take a chance on her. And that's what you're really looking for, to be honest, is if you're completely not sure of what you can do as a capital raiser, you're really looking for an operator to take a chance on you. So you need to give them as many reasons as possible why they should do that.
Love it. Love it. Thank you so much, Anthony. And obviously there's a ton more questions that we'd love to ask here, but we don't have that much time. So just want to wrap up by, can you let folks know what's the best way for people to get in touch with you if they want to stay connected, if they want to reach out to maybe learn more about what you're doing at Invictus? What's the best way for folks to get in touch with you?
Yep. So you can head over to invictusmultifamily.com. That's what we do on the real estate side. If you have questions for me personally, just shoot me an email, anthony@invictusmultifamily.com. Happy to chat. And if there's questions about capital raising that you guys still have and like how to get that those first dollars in the door, reach out. I'm happy to share my story and some things that I've seen that work and don't work. Otherwise, you can find me on literally all the social medias, except for TikTok. I'm not there yet.
Lovely. And last question. What's your favorite book besides Rich Dad, Poor Dad, and obviously besides your own books? What would you say is your favorite book?
Favorite book, and the one that I gift the most often, is Meditations by Marcus Aurelius. It's a book from a guy who was running, a massive empire, and it was just his journal to himself, trying to wrestle with all the same questions that we wrestle with today, which is like, what's it mean to live a good life? What's it mean to be a good person? How can I live in alignment with this greatness that I feel inside of me? And when it comes to entrepreneurship and investing, it's a mindset game first and foremost. And that book has helped me more than anything else get my perspective right.
Love it. Anthony, thank you so much for your time today and for the value you've added for us. And really looking forward to continuing to watch all the great things that you're going to be doing at Invictus. Thank you so much.
Thanks, guys.